Let's talk about May's market mayhem. Guy Spier, Chief Executive of hedge fund Aquamarine Capital, joins us. Hi, Guy. Good morning. Thanks for joining us.
Good morning, Mark. How are you?
Yeah, not too bad, Guy. How was May for you? Was it as gloomy as Manus was painting it?
May was very gloomy, and perhaps it's an illustration. Actually, the oil spill and the political blowback that Barack Obama is getting is really the epitome of something that the markets hate, which is uncertainty, especially political uncertainty. And we have perhaps more political uncertainty than I've ever seen in my life vis-a-vis some very important problems. And for as long as the politicians, the political class, are not addressing those directly, I think we'll continue to see this kind of volatility in the markets, and we're unlikely to see markets go much higher.
And you're critical of both European and US policymakers, Guy.
Yes.
Who are you venting most at?
Well, in the United States, the issue there is that the government is trying to create Europe within 2 or 3 years of coming into office, when really the vast majority of the country, which is shown by polls, are very, very concerned by the large amounts of debt that has been taken on. And until they turn around and start dealing with that, I don't think that the American market's going to be very happy. And then when you look at Europe and you look at this Greek debt crisis, it's a structural issue. You do not have a government body that can look at the issue as a whole and make policy decisions for Europe on a whole. You have a deficit of power. And so I think that in Europe, you really have something that's going to last an extremely long time. And the current politicians are not in a position to deal with it.
And you're looking at an environment, Guy, over the next few years, potentially, where the way of getting rid of this debt is through much higher inflation. So are we looking at historically high inflation rates for the next sort of few years?
This is the great contradiction and the great difficulty of investing today, is that right now most economists would agree that we're in a deflationary environment. We have credit that is expensive. We have a recovery that's trying to get underway. We have excess capacity in many industries. That all points to a potential deflationary environment. But we can see that the American government is printing cash like it's going out of business. In Europe, I believe that the Bundesbank will eventually cave to tremendous pressure and start also printing cash like it's going out of business. And then the question becomes, are they going to be able to suck that cash out when the recovery comes? And I think that the most likely probability is no, which is the reason why gold is going through the roof. And ultimately, when that inflation kicks in, which, by the way, may not be for another 2, 3, or 4 years, we will see stock markets go an awful lot higher. But exactly when that happens, we don't know. And it's extremely hard to decide right now. If you want to hold cash, you're going to get very little return on it. If you're going to hold stocks, you're going to be dealing with a high amount of volatility. It's no surprise that gold is going up. But what really does surprise me, actually, is that oil and gas has been hit. Because when you think about it, the political response to the disaster in the Gulf of Mexico is that they're going to reduce the amount of oil that's drilled for. So ultimately, what's going on in the United States right now with the oil spill is actually extremely bullish for the oil market.
Guy, thanks a lot. We'll speak to you soon. Thanks for joining us today. Guy Spier there from Aquamarine Capital.